All right, good afternoon, everyone. Hope you're doing well. It's nice to see another day disappear off the calendar. Next Friday is options expiration, and we could not be happier to see one more day disappear. Yesterday went extremely well for us, and today is not bad either. Both our Netflix short put spreads, 175, 170s, that we sold yesterday at basically the bottom of that panic. The CFO at a conference, even though he's leaving, told investors in the conference, I don't know that I'd be short this stock into next quarter. The stock has subsequently gone from 181 to 191 in a matter of, from yesterday's lows to today. We're extremely happy that we were able to capture that on Twitter. Several times we said we were adding to the position again. It's worked extremely well, and next Friday we should, finish up collecting a ton of premium, a couple $1,000s in short put spreads that we sold. Bank of America was another stock that when the stock broke $11 a share and got really ugly, that we went ahead and we did two things. We rolled our December 12-10 put spreads out to, in most cases, February or March, and we're now short the 11-9 put spreads, both in February and in March. So far, we're up 60% on the ones for February on the roll and 24% on the ones for March. Bank of America looks extremely strong, and hopefully we've seen a couple-day rally in the bank. We'd like to, keep seeing it go in that direction. So both Netflix and Bank of America. We also, in addition to rolling those put spreads, we like the January 2012 12.5 calls for Bank of America. That gives us plenty of time to be right. Looks like we're up about 27% on that holding, but we are looking for closer to $15 or $16 in the share. We think Bank of America in another year from now can return back to the highs that we saw for this year, which is about $16. So that's what we're looking for. We'll look to exit those 2012 12.5 calls at around $4 or $5, depending on how much time premium is left in there. Okay. The trade really is to be brave and get long the Jim Cramer Fads Can stocks. That's F5, Apple, Deckers, Chipotle Mexican Grill, Salesforce.com, Amazon, and Netflix on the big pullbacks. Anytime those stocks have pulled back, it's been scary, it's been pretty sharp, and every single time it's been a place where the stock has then bounced back up. Okay? So when you see those, either sell the put spreads, take a look at in the money calls or deep in the money. Look at deep in the money calls or in the money call spreads. For instance, on the in the money call spread, we bought the December 120, 125 in the money call spread for Salesforce.com. We paid about $3.65 for that call, and it's just a math problem, right? As long as the stock finishes above the top of that, right? So if you're long at 120, short at 125, as long as the stock stays above 125, then it's just a math problem. 125 minus 120 equals $5 spread. So our spread for $3.65 is worth $5 at expiration. It's about a 29% rate of return. We like that as a way to play the Fads Can stocks. The other way to play it is to go out. We like 6 months or more and get long a deep in the money call. So on Salesforce.com, you'd get long like the 110 July 2011 call, right? It's in the money by $30. You've got plenty of time to be right. If the stock keeps running, you're going to see a nice gain in those calls. Okay, the big news in the market is that there is no news, which is great. We need some consolidation. We have seen the market rip into the month of December, and really we need to consolidate those gains. And so the last few days where you've seen only a point or two, that's great. We need to see the market churn around. People that need to take the profits, take the profits. Those that believe the stock market continue higher, we need to see them come in and be buyers. That's happened for the last, basically most of this week, and it's a really nice trend. We are not really putting on any new positions until we see how options expiration goes next Friday. I can't really get a good sense of whether the market's going to go up or go down, and it may be being held up right now by the fact that there's a dividend that's going to be paid out on the S&P next week, and so there's usually some buying going into that, and it's OPEX next week. We should get one violent day. If we get some violent moves on Monday or Tuesday, we'll try to lay out some additional short put spreads and then let Theta do its job. Okay, an important note on HighSoft HSFT. We flagged the 29 and change level, 27 and change level, 27.49. That's your bogey to get long. We'll do a Chartly video so that you can see the channel running on HSFT. It is sitting literally on the bottom of the channel today. We think you can get long again and take that thing back up. We did send a message out on Twitter when the stock got above $31 a share that we were taking profits. I hope you did as well. If you did, you can now get back in about $4 lower than you could have gotten out for, which is a nice 10% swing. Okay. If you grabbed Fire yesterday, it's up 1.6%. Not bad as well. We're also looking for $30 on Fire, F-I-R-E. CML, it's a great example of a stock in which you need to take profits. CML got a takeover bid from Dell, but the takeover bid was actually less than the stock was trading at. The stock is down about 13% today. When the stock popped up 16% yesterday or the day before, we said enough is enough. 16% in one day is an unbelievable return. We're done. We are up 135% on the calls. We did a risk reversal. That is something we sent out on Twitter, so be sure to check the Twitter stream if you want the most up-to-date information. A risk reversal means long call, short put. Okay, we were short the 20 puts and long the 25 calls. Stock went ballistic, 16% in one day. We said goodbye, up 135% to the calls. Now, because of the takeover bid, the puts are almost completely worthless. We're up 90% of those trades. We were long. It was a July 2011 risk reversal. We'll probably take a look at taking the puts off just because we're up 90%, and there's really no reason to stay long the puts just to squeeze out another few dollars. We'd rather have that cash balance available to trade in between here and July expiration. Okay, so the bottom line is, if you have big profits, please don't be afraid to take them. This market usually gives you an opportunity to get back into the stock that you want at a lower price. Okay, so when you got big profits, go buy a sweater. Heck, go buy Cataclysm, the new World of Warcraft title, and help out our thesis on Activision Blizzard. Thanks for tuning us in again today. Good luck out there. Hope your trading is going well, and we'll see you tomorrow. Thanks.